Hi, everyone. Thanks for tuning into the Startup Operators Weekly Roundup. If you're joining us for the first time today, the weekly roundup Indian startup ecosystem. If you're curious about startups, follow this podcast here. So this is probably the last week before the quarter ends, and man, what a quarter it has been in terms of number of IPOs being filed. And we have a lot of exciting news to cover this week. But before that, Roshan, next month.
Gunjan, your internet is choppy, so I hope people can hear you. But yeah, I mean, fantastic week. Sensex is at all-time highs, right? We hit 60K, and yeah, a lot of optimism in the air, right?
All right. So yeah, I think the biggest news from the week was Freshworks IPO. Right, they listed in NASDAQ, and I think over 500 employees became millionaires overnight. The stock was trading close to $47.5, which was a 30% up from its listing price, which is $36. And I mean, they started with only 6 members back in 2010. And also, Freshworks become the first Indian SaaS to get listed on NASDAQ. What a journey it has been, right? What do you make of it?
Yeah, amazing. Seriously, I think for a lot of us in SaaS, it was kind of an emotional moment last week. I think it's definitely a milestone for Indian SaaS, right? Freshworks, we've spoken about them earlier, where we broke down some of their metrics and the journey and everything. Do check out Jason Lemkin's post on SaaSter. Very very detailed description of everything Salesforce. I mean, everything Freshworks is business, right? They're doing about 400 million in ARR, growing at 50% a year, 50,000 customers, net retention of 118%, all very, very good metrics, right? And I think what is especially interesting about Freshworks is also the fact that they have multiple product lines, right? They have the IT service product, which is 100 million plus in revenue, then the service desk product, which is 100 million in revenue, right? And their CRM product is fairly nascent by comparison, and that's also picking up, right? So yeah, and I think that last I checked, they're trading at around $46, which is 30 times or more of the revenue multiple, right? So normally 15 to 20 is good, so 30 is like obviously on the higher side. But if you look at what has happened to SaaS IPOs last year, right? I mean, with COVID, digitization, and everything, I mean, we've seen some crazy kind of valuations even in the public markets. Bill.com was at 43x, Cloudflare was at 33x, Datadog at 61x, and so on, right? So yeah, it's been that kind of a market. It's a good time to list, I suppose, where the public company valuations are matching private valuations also. The fact I like about Freshworks specifically is that they are unapologetically Indian, right? We saw Indian flags across the entire ceremony and everything, and they're a truly global business, right? And this is a template for others to follow. There will be plenty more in line, right? And also an amazing wealth creation opportunity as well, right? We read that 500 people made a crore or more, and 70% of them were under the age of 30. Now that is like truly life changing, right? Even minus the capital gains and everything, that is money that people will take years and years to save, right? And so you're literally giving back the gift of time to these people, right? And this will also mean that they will be a little more open to taking risks and maybe starting up, maybe investing, and so on and so forth, right? I was also reading this tweet by Madhav of Captable. He had tweeted the value of each share, right, at each investment. So at Series A, Axel invested at 5 cents a share. At Series B, Tiger invested at 14 cents a share. At Series D, Capital G invested at $1, 1 cent a share. At Series F, Sequoia invested at $3.16 a share. And right now the IPO is at around 46, right? I mean, the share price is at 46. So you can imagine the amount of wealth that everyone's created, right? Plenty of good articles. I think all of our social feeds were inundated by all of the Freshworks news, right? And rightly so. I mean, truly phenomenal achievement. I particularly liked the post by Sairam Krishnan. He was part of the early Freshworks team, and he had written a very nice, heartwarming sort of a tribute to the early team that built Freshworks. Right? I think the early team means everything, really, for any of these sort of startups, right? Because they're the ones who are like actually putting the operating layers below the vision of the founder, which is equally important, obviously, right? So, yeah, plenty of good news and plenty of good news to follow. So congratulations to all of those who have been associated with Freshworks. You've really built something for everyone else to emulate.
Yeah, when like when it listed, Freshworks was being valued at $12 billion, and in day one they raised an additional dollars on the public markets. But closer to home, there's another new trend that has been picking up, which is the buy now, pay later, right? Like companies like LazyPay, Ola, Postpaid, and it's also something which Flipkart and Amazon are experimenting with. But most recently, ZestMoney, which is a digital credit platform, raised $50 million in a Series C funding round, which was led by Zipco of Australia. Now, ZestMoney users can make purchases at over 10,000 e-commerce websites and 75,000 physical stores across India. They have partnered with 25 banks and NBFC partners and claiming to have over 11 million customers on a platform. Now, this buy now, pay later is a nice alternate for credit penetration in India, right? Because if you look at credit card adoption, it's at a low 3%. So, do you think this whole model of buy now, pay later will help change this landscape in India?
Yeah, no, I agree. I think that's a good point. I think this is at the point of purchase, right? I mean, I think this is also called embedded finance, right? And it goes beyond credit itself. I mean, it could be even insurance as well. So let's say you're booking a ticket, plane ticket or something, you could add travel insurance almost instantly, right? Versus you going and seeking out travel insurance specifically. And the way we consume credit will change, right, as it becomes more and more available. As we move from a $2 trillion economy to a $5 trillion economy, and the per capita income increases, right? I mean, all of these things will, all of these kind of services will become a little more relevant, right? If you look at the mass affluent segment, and mass affluent in India is income range in between 10 to 20 lakhs a year, right? That income segment has doubled over the last 10 years, and the domestic consumption has gone up by over 3.5 times, right? And given also that we have one of the lowest, if not the lowest, credit to GDP ratio, right? We have that is at around 56. And just for perspective, mature economies like, for example, USA is at over 125%, right? But that's also because, I mean, the US bonds are perhaps the safest instruments in the world, and the US can really print money and finance its debt, right? I mean, we're not there, but we're also at the other end of the spectrum in that sense. So these newer forms of services on credit will cater to these rising aspirations of these mass affluent people, right? So ZestMoney has partnered with a bunch of e-commerce players like Flipkart, Amazon, Make My Trip, and so on. They've also partnered with over 75,000 physical stores as well, right? Yeah. So, and it's it's great, I guess. It's even if you are at a 10 lakh or 12 lakh sort of an income bracket, buying a one-time purchase of, let's say, a laptop for around 80 grand or 90 grand or something of that sort can really set you back, right? So in this case, I mean, it makes it affordable. So any purchase under 5 lakhs is what they look at, right? And there are other players as well in the similar market. There's Early Salary, LazyPay, Slice, and Credit B doing something similar around the credit services itself. But yeah, I mean, fantastic stuff, and all the best to the ZestMoney team.
Yeah. It's kind of like reminds me of the modern Bajaj Finance EMI scheme that we used to take. Yeah. So another company which has made its name just purely on brand, right? Momo has raised $15 million in a Series C funding round, and this was led by Treeline Investment Management. And with this Series C fundraise, Momo is now valued at over $165 million. Now, primarily, these funds will be used to launch its new FMCG business, ready-to-eat Momos. And this will also fuel the expansion of its quick service cloud kitchen brands and also help launch new verticals. Now, Momo had forayed into this space after it had launched ready-to-eat Momos, and they're currently exclusively available on Big Baskets. but soon I think they'll be available across all e-commerce platforms and will be there for distribution in tier 2 and tier 3 cities in the next 6 months. Now, after you had suggested, I was reading Rory Sutherland's Alchemy, and this is like a perfect example, right? Like momos is something you can eat for like a 50 rupees or something from the street. But how Momo has actually branded it and is distributing it's really commendable.
Yeah, absolutely. And they have such a wide range of momos as well, right? I mean, I only thought, I mean, you would have two varieties, right? Either the chicken or the veg. I mean, these guys have tandoori momos, chocolate momos, steamed, fried, and I think probably 10 others, right? They have something called a Momo burger as well,
Yeah.
right? So I have eaten at Wow Momo, I mean, a couple of times, I think, right? You're right. I mean, so this is brand as a key differentiator, right? Because this is something which is so widely available. Literally at every street corner, you have one Momo shop or the other, right? And I think post COVID, you're seeing some demand return, right? As people go back to offices, as people commute, and so on. So these quick serve restaurants are going to see demand pick up. Last year was a brutal year for anyone in hospitality industry, right? So yeah, I mean, so this was started right out of college apparently. So, and it's been a 13-year old story, right? So restaurant business is very hard to run, requires a lot of execution chops, right? And especially scaling it is super tough, right? Because again, I mean, you're scaling logistics, you're scaling people, and all of these things are not as easy to scale as, let's say, the software business, right? So I remember speaking to Ankur of Nuclei sometime back, and he was a restaurant entrepreneur before, and actually pivoted to building software because he thought it wouldn't scale, right? Very similar conversation with Ishwar as well of Mukunda Foods, who pivoted to building machines for restaurants and kitchens, thinking that the food business will not scale. So yeah, I mean, I think they have 50 plus branches across the country, employ something like 2,000 people, right? Which is phenomenal. And think about it, it's a Momo shop with 1,000 crore valuation, right? Which is amazing testament to the brand and amazing testament to the execution.
Right. So the past week has also been especially great for startups in the health tech and fitness tech space. Medica was one of them who raised $75 million as part of a Series C investment. This was led by Craigus along with CDC Group, that is UK's development finance institution. Medikabazaar basically provides medical supplies to clinics and hospitals. They have 100,000 medical establishments, over 150,000 independent medical professionals. They also have 15,000 seller partners already on board. And I think through the next fiscal year, they're aiming a growth of 300%. Now, interestingly, about 50% of Medikabazaar sales are to smaller hospitals and nursing homes, and around 60% of its customers live outside large metro cities. Now, do you think this plays some sort of an advantage into this, or what are your thoughts on this?
So this whole B2B commerce is just rapidly evolving space. I mean, something to definitely keep an eye out on, right? We've had Bizongos at work, and off business as well, on the podcast. And this whole procurement, financing, platform, software play is extremely powerful, and they're so vertically integrated as well, which is what Medikabazaar is, right, in the health tech space. If you look at health tech itself, these machines are extremely expensive, right? They cost in the order of lakhs, if not crores. They're also very specialized as well. So you can't really have them available at all times, right? The supply is pretty limited, and there are multiple people in the chain, right, including distributors and so on. And also, I mean, you don't just buy this machine and then use it, right? I mean, you also have a whole lot of servicing that goes around with it. So this whole procurement process is extremely complex, right? What Medikabazaar positions itself is as a one-stop shop for health, right? For all health procurement. So they have all of this platform, then inventory management, financing, all of that. And for a small hospital, I mean, it can become a very integral, right? Because these things really matter. And Medikabazaar has about 15,000 seller partners. They've apparently delivered over 500 million units, right? So that's phenomenal scale. They were apparently doing GMV of about 100 million in FY20. and had a target of 200 million in FY21, right? This is again, one of those businesses with crazy margins, right? And repeat sales, right? It's not like a hospital will buy once and then forget about it, right? I mean, obviously they will buy multiple times. And also, as I mentioned, these equipment itself are like pretty expensive. So there's a lot of margin to play as well. So yeah, one of those really, really nice businesses actually.
Right. And on a personal front, I think Fittr has raised $11.5 million in the Series A fundraise. And this was led by Dream Sports corporate venture fund called Dream Capital and Elysian Park Ventures, which is the private investment arm of LA Dodgers ownership group. Now, Fittr has built an amazing community, right, around health and fitness marketplace. They have over 400 coaches and a monthly active user base of north of 450,000 users. And over 50% of them are paying customers, right? I think they are on track to have an annual revenue of $15 million this current fiscal. And this is all coming out of something built out of community commerce. What are your thoughts on this?
Yeah, there's a fantastic example of community-led venture, right? Over 3 million, or perhaps, I mean, I think they're closer to the 4 million mark right now, 4 million members, and almost zero CAC, almost zero customer acquisition cost, right? I mean, everything is word of mouth, and that's like a phenomenal place for any business to be in. And also, the other interesting thing is this began as a WhatsApp group, and very often, people are so keen to start building stuff, right, without actually understanding, what is the higher value that they're delivering, right? And here is a very nice sort of a mechanism to hook into that value proposition, right, through a WhatsApp group, right? So I spoke to Sonal some time back, and in fact, I mean, we'll publish the podcast on Tuesday this week. Right. So she was working in Deloitte and wanted to do something different. And so she applied for a competition. And that's how she discovered Jitendra Chokse, or JC as he's known. And they kind of hit it off. And that's how sort of Fittr evolved, right? And health and nutrition is a very, very crowded space, right? Literally, there's all kinds of advice. Everyone with a Twitter following is like giving you gyan on, what to eat, what to work out, and so on, right? And so in that space, to build brand and credibility is extremely difficult, which again shows you the power of the community itself, right? I mean, it's completely a community-led initiative. And with respect to the business model, I think they have a B2C freemium sort of a model. So you have a bunch of stuff free on their website and their app. And they also have these transformation challenges, which are really crazy. I mean, if you've seen a few of them, I mean, people have just gotten shredded in like 12 to 14 weeks time, right? I mean, really kick-ass, very, very inspirational. I wanted to start lifting immediately soon as soon as I saw some of this stuff. But yeah, users can pay for some personalized guidance and customized plans, diet plans, and weekly checkups, and so on, right? They also have these corporate wellness programs, and they offer coaching certificates also, right? So there are plenty of monetization models and product lines as such. And one thing that COVID has taught us is the emphasis on health, right? And the fact that you have to take care of your your health, right? And you have to invest a lot more in that. So yeah, I mean, this is a very interesting business, and I'm quite looking forward to seeing the reaction of people once they hear the podcast. I mean, it was a really nice conversation. So yeah, do check out the podcast with Sonal, which will be published sometime next week.
Also, in other news, online used car retailer Cars24, they announced that they have raised $450 million in a funding round, which was led by DST Global, Falcon Age Capital, and new investor SoftBank's Vision Fund. After this fundraise, I think the company is now valued at $1.84 billion. Cars24 plans to use the fresh capital to deepen its presence in UAE and Australian markets, where they had recently made forays. And also, they want to build its cars, bikes, and financing business in India while investing in the tech stack. But interestingly, right, demand for used car vehicles has seen an immense rise. We have, spoken about companies like Vroom, Spinny, and CarTrade. What do you think is actually driving this whole investor interest in the space?
You're right. I mean, used cars are going to pick up, right? And the used car market was valued at 27 billion in 2020, and it's expected to be around the 50 billion mark, almost double by 2026, right? I think few trends that are in play are the fact that, post COVID, I think individual mobility has become a little more important, right? I mean, people are not using mass transit as much. And the fact that, you're seeing very low interest rates right now, fairly flexible financing options from these kind of players. There's also this whole emission standards change that is expected, right? And which is why people are kind of holding back. So that plays into it as well. And this whole organized used car sales, right, segment is growing rapidly. It's growing at 22%, which is pretty crazy, right? We've spoken about Droom earlier, Spinny, Cartrade, and all of them are trying to offer this very standardized buying experience, along with some vertical integration and services, right? So yeah, I mean, it's a classic case of technology streamlining things in a very fragmented sort of a marketplace, right? And because of the business potential, you're also seeing some of the OEMs enter into the space as well. So you've seen Maruti, True Value, Mahindra First, and so on. And it's not just budget cars, or it's not just the hatchbacks and so on, right? I mean, you're also seeing luxury segment growing, actually. People buying like used cars which are in that higher range. So yeah, I mean, and also it's a pretty profitable business as well. The commission varies anywhere between 2 to 2.5%, right? And 2.5% on a multi-lakh purchase, right, can mean a healthy margin as well. So yeah, it's definitely a growing segment, and that is why you're seeing investor interest in this.
Right. Also, another topic that we have been touching quite frequently in the past was this whole talk about neobanking. Right. Last week, Flobiz, which is a neobank for small businesses in India, they raised $31 million to scale their efforts across the country. This was led by Sequoia Capital and Think Investments for the Series B financing round. Now, Flobiz's primary product is called My Bill Book, which helps small and medium-sized businesses digitize their entire operations, right from invoicing to streamlining accounting and even automating their workflows for enterprises. And very interesting, right? Just last quarter, back in March, they raised the Series A round, which was worth $10 million. Now, Roshan, first question would be that, okay, these short funding cycles, what does that mean? And also, in this whole neobanking space, right, as it's getting crowded, what do you think will the future of banking in India look like in the next coming years?
Sorry, I was distracted by Sarthak's very gracious comment on the YouTube channel, right? So he said, really liked your episode with Vasant Sridhar of Off Business. And also he liked the one with Vipul Singh of Ara One Man Systems. So thank you so much, Sarthak. Thanks for the shout out. And do check out those episodes, folks, for those who are listening. So see, Flobiz, I think such an amazing thing, right? Two of the Startup Operator podcast guests are, have raised funding this week, Flobiz and Fittr. So, we've covered this earlier that there's going to be a real incentive to formalize right now, right? With plenty of things happening, both on the policy front and on the innovation front. On the policy front, I mean, you're seeing this whole account aggregators framework, for example, plenty of access to services and so on, for which formalization will be the key, right? And on the innovation front, I mean, you're seeing, startups like Flobiz, plenty of others who are building software that actually solves real problems for these SMEs, right? When you say SMEs, I mean, again, it's a very catch-all term. There is anywhere between 60 million to 80 million SMEs, depending on which report you look at. But yeah, I mean, building for this segment is super, super challenging, right? It's not as easy. They're often very demanding and they don't pay as much, right? But yeah, I mean, of course, they're a huge segment that, people are looking to serve. And Flobiz offers these mobile first accounting solution, bookkeeping and so on, right, for small businesses, which is, of course, I mean, today, I mean, it's just carried out in this pen and paper style, right? And it can get really, really complex. I think a lot of these businesses are also seeing the second or third generation step into the stores and manage this stuff, right? And this is the savvy business. This is the savvy entrepreneur, right? Who's sort of aware of all these internet services and stuff, right? And so, which is why, I mean, you're also seeing a lot more adoption on these fronts. Flobiz, yeah, I mean, they've been growing really rapidly. They raised about 10 million earlier, as you mentioned. And this is another pretty big round for the Series B, right? It was a fantastic conversation with Rahul earlier, and he's very, very articulate, right? And we spoke about all of the opportunities and challenges in this whole building for SMEs as such. Plenty of aspects of acquisition, monetization, and so on. So it's a fantastic primer for anyone looking to understand what is happening in this whole SME space, right? I like what Flobiz's tagline is also, right? I mean, they say Atmanirbhar Vyapari Bane, which is amazing. It really hits home. So yeah, fantastic news, and all the best to the Flobiz team.
Yep. Also, in the EdTech front, this week, online coding platform for kids called CuriousJr, they raised the seed funding of $1 million from Westbridge Ventures, NZR Ventures, and angel investors. Now, you won't believe 88% of the K-12 users in India do not have access to a PC or a laptop. That's why CuriousJr is trying to focus on building India's first mobile-based learning platform, and that too in vernacular languages. Now, the company will utilize these funds to further refine the product and create a more engaging learning ecosystem for the K-12 students. Now, this is very similarly mirroring what Whitehead Junior does, and I'm pretty sure that Byju's would already have its eyes set on this company. So maybe in like a few months' time, it will be soon talking about Byju's acquiring CuriousJr. But interesting, a very great tweet which we came across last week. Right, it was talking about India in 2030 and how the Indian economy will look like, right, in the next decade. It goes on to explore about the growth in GDP, the per capita income, and also the growth of middle class and consumption. And looking back at all the news that we have covered in this quarter in the roundup, is the whole economy is rising, investor interests are at an all-time high. So, Roshan, how do you see this? See the economy growing in the next 10 years?
Yeah, so I also wanted to put a tweet of, want to mention Ashish Dave's tweet, right, where he said, never bet against India. And I think if you look at this thread, right, it does a very good job of explaining, what India's economy will be like in 2030, right? And few of the highlights from this is that, per capita income going up by 2 times, right, to around 4,300 or so. Right, which is of course not adjusted for purchasing power parity, but you get the sense of it, right? I mean, it will roughly be the same, suppose around that, right? Consumption growing up, which is what we spoke about, right? The growing middle class and so on. Also, some of the infrastructure and stuff, right? I mean, the national infrastructure pipeline, for example, right? So again, I mean, all of these things are mid-flight, and it also depends on how the execution pans out. But again, these are like platform level stuff. These are like real game changers if it happens, right? The asset monetization, for example, and the PLIs, which we have spoken about, production linked incentives. So this does a fantastic job of explaining all of these things and how that will pan out, right? I mean, if it is executed and so on. Fantastic thread. Do check out Multiply as well. They're at Multiply Social, and they put out these very well researched tweets on the economy and so on. So yeah, definitely should be of interest for anyone looking at this.
Yep, I think we'll link this tweet in the description of this episode. Do take a look at it. So let's talk about some of the episodes we'll be putting out this week. Roshan, you briefly spoke about your conversation with Sonal on building a fitness community. Can you tell us something about your conversation with Ashish Chanda?
Yeah, so Ashish, actually, that's the title is wrong. It's not streamlining B2B commerce. So Ashish is building a wealth advisory, right? I mean, we spoke about the mass affluent segment, the people who are in the 10 to 20 lakhs, or as he calls it, I mean, who can spend about 10K USD on investments and so on, right? So this segment cannot really afford bespoke wealth advisory services. And that is the opportunity that Ashish is chasing with his team at Crystal AI, right? So it's sort of a human plus tech enabled advisory, right? So they have baskets. That's a quick change, Gunjan. So, so they have these baskets basically, which they call crystals, right? Something similar to what Small Case offers you. Right, but in this case, I mean, what Ashish says is you can invest in the world, right? I mean, so they're going to they're going to have these deals where, which pretty much none of us would know of, right? So they're going to put these deals together, and you will have a chance to kind of invest in that, right? And across global markets as well. So they're based in Singapore. They're also present in Hong Kong, Middle East, and India, right? So pretty interesting business and a very good chat as well. So if anyone's interested in how this whole wealth space is panning out, it's a fantastic episode to check out. And also do check out the episode that we're going to put on Fittr for sure.
Yeah. So I think the episode with Fittr, Sonal will be putting out on Tuesday, and I think on the Thursday we'll be putting out the episode with Ashish. So yeah, I think that brings us to the end of this week's roundup. A great chat, Roshan. A lot of interesting news we discussed this week. Also, to all the listeners, I mean, our website is live. You can check out the website at www.startupoperator.in. And in addition to that, we're also starting a small WhatsApp community where we're discussing all the episodes on a regular basis, latest updates from our side, and also running multiple forums on the group. So I think we'll add the WhatsApp number in the description of this episode. And yeah, I think we'll again see you next week to discuss what's up next in the Indian community.
Right. Thanks so much for joining, guys. See you next week.